luck with the market. Right here in ET Now, the big piece of news this morning is that the ceasefire gets extended between Iran and America, and it's the official commentary now. And look at what it's doing, not just to equity markets, but sensitive asset classes like crude, for instance. Brent has fallen almost 13%. You've got NYMEX, which has cooled off about 15% as I speak, and natural gas as well is seeing quite a bit of ease off. And of course, the equity markets are clearly cheering this ceasefire extension. But let's welcome on board Peter McGuire and ask him about whether this is the new norm now for crude. Peter, hi, good morning. Always good to have you on ET Now. Peter, does it seem like this big cool-off is going to last long, or do you think this is just a knee-jerk reaction that one is seeing?
Well, good morning, Aisha. I tell you what, a lot changes, doesn't it, off a couple of statements, and it's a two-week freeze. Have a look, 16% down for WTI. I'm just inhaling it all. Equities are having a boom of a day across Asia. It's very hard to say, are we at that point that there's no return and everything returns to normal? What is normal? How does it look? What does it smell like, taste like? And how's it going to unpack? So at the moment, I've got to be bearish for crude. Yesterday, I was bullish because I didn't think they'd come to a deal, but things change, as you know, very quickly. And when you're looking at commodities like this, it's just an enormous sell-off.
Peter, how do you look at crude from here on? It's just a 2-week ceasefire. Do you think this can get extended given the kind of conditions which have been set by Iran?
Well, Sajid, I think a couple of things. First off, yes, I've got to give it a 2-week time frame, and I've got to say, if nothing happens in that point in time and there is a total ceasefire, I would expect energy prices to soften from here. And if there is, and that's what we've got to hope and assume and pray for, that there are no attacks and everything just is what the letter of the law says. So we work through the next 2 weeks. We look at softness across the whole complex as far as price, shipping returns, and things start to take a more active stance. If that's how it rolls, then that's a good sign. But if there are any hiccups or anything unknown, that changes the whole geopolitical footprint, as we know. So let's just hope and pray that things move in the correct angle, and time will tell.
Peter, let's say all of our prayers are answered. What's the downside risk thereafter? Because there's still been some amount of impact and supply disruption that's played out. Also impact on manufacturing infrastructure within the oil and gas industry globally. What is it going to look like? Because it's going to be a slightly different world, I would assume.
Absolutely, Hirsch. I mean, that's so true. You don't just turn a key and say, right, oh, well, here's the key. Go and turn the engine and everything goes back to normal. That is not how it's going to happen. We understand that there are issues as far as LNG coming from Qatar. We all understand that there are issues as far as production, how the fertilizer industry moves, what happens as far as any other choke points. So there are many different components of this that have got to be worked through, and time is going to be the savior. So if this is the end of this whole conflict, then we put it to bed and say, yes, it was a 6-week conflict, and then it just takes a normal stance and it returns to a new form of normal. But there's still a lot of water, as you know, to pass under the bridge until that is actually the status quo.
Okay. And Peter, therefore, should one go risk on again? Is that the right way to think of it? Because you stand at an interesting confluence. You understand commodities, you understand equities. Give us a sense of how to play this.
Well, you know as well. Have a look at the screen now, Hirsch. 6% up for Kosdaq in South Korea. Nikkei 225 up 5%. Australia's up 2.6. China's up 2.4. Taiwan 4.3. There is a return to risk on. And it's going to be very interesting to see what you guys do today. I'm keeping a very close eye on the Nifty, Sensex, and how all of that works. So I think at the moment, it's going to be back on as far as risk. US dollar came under pressure. It's now under 99. Bond yields have cratered a little bit, back at 425 for a 10-year, 373 for a 2-year. So I'm seeing a softness across the bond yield, softer dollar, and I would say risk on.
Sticking your neck out on that. Peter, great to be chatting with you. Thank you so much for your time today.
Thank you, Aisha.
Okay, let's